good to record. Okay, now continue.
Okay, no problem. Thanks. So what I'm asking is that last week we were saying we were talking of the highs and the lows within an hour, and we could see that there were changes. There are times it is high, there are times it is low. So when we're trading, would we be looking at the trends on an hourly basis, or would it be safer to look at a daily basis? What would be the best time to? I mean, how would we go about it? Looking at it hourly or daily basis within 24 hours?
That's a very good question. That's a very good question, Victor. So normally for this strategy, we do not. I know where your question is coming from. You know, from our background of scalping, we used to do market analysis. First of all, you look for at a higher time frame, then you come down, and then you trade at a lower time frame. But for this particular strategy, your analysis and your trading are all on the one particular time frame. That is 1 hour. So you do your analysis on the 1 hour and you trade on the 1 hour. If the market goes up, as I showed you in the assignment we gave you, remember when it went up, I told you there's a high probability it's going to turn here, but it never turns. So if it doesn't turn, it creates a new high, you just keep marking it until the time it will come and turn. And then now you wait. It's almost like you wait for, there are some telltale signs you wait for. Oh, now it's ascending. Oh, now it has changed confidently. Oh, where do I put my order? But you will not use multiple charts. It's just one chart.
Okay.
Right?
Okay. Yeah. Okay. I get it. Then there was a time I was just looking at some of the charts, and it was like I don't know if I should just call it even minutes. You could see the changes, the value changing, like in milliseconds or the like. Is that what we should be expecting, or that was just I don't know if that was a dummy, because I just gone to the YouTube and I was just seeing what's happening, and you could see the value changing in split seconds, and I was just like, oh, this is what we should be expecting. So is that the way it's going to be?
No, ours will not be changing in milliseconds. So I think that one, as you have seen, even me when I was doing the back testing on the CTrader, basically I was simulating market something that happened in July, way back. So normally when you're playing back, you can make it play faster. But in the real market condition, a whole candle will take an hour to form. So it will not be too fast for your eyes. It will take a whole hour. You see the way those candles form, it takes a whole hour to form. So basically, in fact, this strategy allows you, if you're a very busy person, this strategy allows you to just check the market once in a while. You can decide that every top of the hour, just check what is happening now. Nothing much. You go back to whatever you are doing. You come back after another hour. In some particular instances, especially when the market is in consolidation, you can, after now, you get a bit more experienced. You will notice that, I don't even need to check every hour. If there's consolidation, this thing is going to be in consolidation maybe the next 2, 3, 4 days. So I come back, after those days, that's when something is happening. So those milliseconds, let them not scare you. Either somebody was just simulating, making the, even me, when I'm back testing, like I was showing you, I can increase the speed. You see the candles are forming very fast.
Yeah.
But ideally, those candles form after every hour. Because we are trading and doing our analysis in the 1 hour chart.
Okay.
Yes.
Sawa. Thank you.
I don't know if Victor is speaking on behalf of everyone else. The other people are just quiet. Jackson, you want to add? Yes.
Yeah, I want to add on something, rather to clarify something that you have just said, because there's a question I'm seeing here being asked by Victor Hofula, that clarify when is the best time to trade when ascending or descending. Now, I think I know these terminologies are still confusing, but let's just understand one thing. Ascending only happens on an uptrend. When you see ascending, what you are trying to do in essence is that you are trying to establish, rather you are trying to read the market to inform you that, look here, I am slowing down. And when the market is slowing down, it is likely the probability of it changing direction becomes high. That is basically what you're trying to do. By looking whether there is ascension, you are trying to establish whether the momentum is slowing down, so that then now you can prepare yourself to take advantage of the trend as it goes down, whereby you're going to be placing a set. On the other hand, when the market was on a downtrend, then the descending pattern will be like now, it will be preparing you. It is kind of, yes, it is moving down, but it moves down and pulls back. Then it is just telling you, look here, I am about to turn around. So you need to check some boxes so that you can be able to place your buy right at the beginning of the uptrend. Yeah. So that should be very clear in our minds what we are doing when you are looking for ascending. What is it that you are looking for? You are looking for that slowdown. Then you want to see a confident change of direction. Once that confident change of direction is established, and that is part of what we will be able now to cover next week. We don't want to preempt that. But the confident change will tell you now, look here, truly there was a slowdown, yes, and for sure the market, as it is essentially confirming to you that the trend will now go in the opposite direction. So it goes, once it breaks, and again you'll have to tick. It's not all breaks. Sometimes it will break and still continue with the upward trend or downward trend, as the case would have been. So this question is a matter of probability, but from past back testing, it is such that then many times when the change of direction is preceded by ascension, ascending pattern or a descending pattern, then it confers over 90% of the times it would be actually that truly the market will turn, and that is what we try to take advantage of, so that when it breaks, then it comes back to retest. When it comes to retest, we go up with it or we go down with it. Basically, that's how we enter into the market now, and that's why you are hearing Ken saying that at some point he was saying that here you will be in profit. You would be in profit because there was a change in direction, there was a retest, and now the market has now actually started going in the direction that we expected it to go after turning. So ordinarily there you should be, your trade is now, you are in the trade and you're moving now with the trend downward as it goes until you will exit and actually make your profit. Basically, I thought I should clarify that because I can see there's still some confusion. We are looking for both instances: ascending to prepare you for a sale, descending pattern to prepare you for a buy.
Okay. Thank you very much.
Maybe I can throw in another example. If you watched movies or maybe the pilots when they're flying, usually like the big airliners, you have two pilots, and one pilot is always cross-checking with the other guy. So when they say, okay, now we are about to take off, okay, so they're waiting first for the procedure for taking off. You must get okay from the control tower. Then he marks in his book, check. Then the runway must be clear, check. Which particular line they will use, check. But then when they're told now it's okay to start going, then they go. When they get to a point where they need to get into the runway, they pause and wait and get an okay again. So basically it's step by step. Again, if you listen, like when they're landing or taking off, yeah, it feels like landing. You see the guy say, okay, check the landing gears, check, do this, check, do this, check, then the plane lands. So there are steps. So when we say that these are rules-based trading, it means that before you actually take the trade, there are some things that must be done. And those things are what we're calling rules, like cardinal rules. One, the market must, break or must be descending, check, turn around confidently, check, re-entry, check, then you enter the trade. So there are all those steps. And that is why you find for us to introduce this, we have to devise a strategy from abstract, very high level kind of, and then as we go on, we focus, we zero in, and then suddenly it will all make sense. It will all just make sense. Yeah.
Okay. Thank you. Getting a little clearer now as we move on. Thank you.
Just a quick question. Who was logged in as HP? Is it somebody?
HP must be
Alphonse. That's Alphonse. I'm actually using my laptop. I'm sorry about that.
Oh, Alphonse.
Yes, Alphonse.
Ken, Vincent here.
Yes.
I wonder if I want to take you back to that confirmation candle.
Yes.
You talked about some confirmation candle there.
Yeah, let me share something so that we on the same page. I'll share on my PPT. So, yeah. So you mean this second one, the one that confirms? Carry on.
Yeah. Yeah. What I want just explain that confirmation candle here.
Yeah. So
a little bit. Few minutes.
Thank you. That's a very good question, Vincent. So normally, what happens? The market moves not in a straight line, but it just normally moves like this. It goes, pulls back, moves. So it might actually be this is an uptrend. It's going up, but it's not usually like a straight line like shoop. It basically moves like a I was going to say like a drunk person, but yeah, it moves in zigzag. So it moves, pulls back, pulls back, and so on. So the reason why sometimes we want you to confirm that we are ascending, notice that this green candle broke. This is the previous high, right? So it broke. So normally you will need to check what the second candle is doing. So look at this second candle. It went higher than this actually, but it didn't stay up there. So sometimes what might happen is, let me see if I can draw. It might have come like this, but failed to come back. Are you seeing what I'm saying?
Yeah.
So notice this black candle that I've just drawn. It might have come like this, but failed to touch this line. Then in this case, we will say, we were not ascending. In fact, this thing has momentum. We are not losing momentum. It has momentum because it has gone up, but it's not coming down. But if it comes down and touches this like this, then we are saying, no, we are losing momentum because it's going up, it's breaking away from this previous impulse, but it's coming right back inside. So you use this second candle after the break to confirm. If it touches anywhere on this line or it goes lower than this line, then that is your confirmation that we are ascending. I don't know if that answers your question. So if it goes the way I've shown you, like the candle comes, but it stays up like that, yeah, then we are not ascending. Get?
Yeah.
Yeah.
Okay.
And then maybe another one comes.
Okay.
And then goes higher. It means now, because the whole essence of ascending is we are losing momentum. But if you just keep getting them, they're going higher and higher, it means we are not losing momentum. In fact, momentum is building. So we are still continuing upwards. But the whole idea of them coming back, it confirms to you that we are losing momentum. Are we together? Hello?
Can I ask?
Okay.
Can I ask?
Yeah.
Can you hear me?
Yes.
Yes, I think what can be a bit confusing there is, okay, I've understood the bit of losing momentum, but if it's not losing momentum, then it means we are still ascending. Is that correct?
No. That is not correct. Ascending is what means that you are losing momentum. If you are not losing
I thought
momentum,
ascending is going up.
No. Going up is an uptrend. Please don't confuse the terms. Uptrend is when you're going up. Ascending means now the impulse is getting weak. The momentum is reducing.
Okay.
Yes.
Okay.
Yeah.
Okay.
Think about it this way. Just use this candles again. When momentum is big, normally, sometimes you can tell by the size of the candles that are forming. So you have a big candle. You have another big candle. If they're forming like this in quick succession, that is a very strong momentum. But when you start seeing candles forming, but they're not staying up. So, if we are on an uptrend, we expect that they're going up, right? But instead of becoming bigger and bigger, they go like this. They start becoming smaller. Yeah. And then another one, instead of going up, it actually even becomes smaller. You see, so it's almost like we're forming baby steps. You get? Then now it shows that we are losing momentum. So if you compare like these two candles that I've drawn, this one has very strong momentum, like a strong candle followed by another strong candle. But look at this one, a small candle, then the other is even smaller, then another smaller. Sometimes it even turns, it's almost like it's a counter trend, it's coming back. So meaning the momentum is reducing. Are you seeing the difference? You will forgive my drawings, they're not really to scale, but let's say this one comes like this. You get? So example one, this one, we are not losing momentum. The momentum is very strong. In fact, you expect the next one to just keep going up. These are what we call the super trends. It will just keep going up. But when you start seeing them behaving like this, the candles either becoming smaller or they start showing some wicks, or they are not showing signs that we are going to continue in the up direction. That's now what is called ascending. Ascending.
Okay.
Don't confuse ascending with the uptrend. Ascending, it just means that we were on an uptrend, but now instead of forming big impulses, the impulses are becoming smaller and smaller, right? Meaning the momentum is reducing. So we are just about to turn.
So then that brings me to the next question.
Yes.
So in trading now terminology. So when trading, do we speak now in terms of ascending and descending, or uptrend and downtrend?
No, you use both. Uptrend means the market is going up. You know that, right?
Yes.
So uptrend means the market is going up.
So is that the right time to, like, if one is selling, or is it in ascending?
What do you do when the market is going up? Ordinarily, forget even about this strategy. Do you buy or do you sell?
Sell. I sell.
When the market is going up, yes, exactly. So when the market is going up, you buy. You are in long positions. But you see, the market does not go up forever, right? At some point, it corrects itself. It turns, right? So if the market is going up, we say that we are in an uptrend. But then at some point, instead of the momentum becoming bigger, they start becoming smaller. The momentum is reducing. So that time that the momentum is reducing and we are going up, that's when we say we are in an ascending. Ascending means we were.
So that probably is a signal for us to exit.
Yeah, if you are buying, you don't continue buying. You need to exit, because it means that the buyers are losing momentum. The market is about to turn.
Okay.
Yes.
Okay.
Yeah.
Okay. Thank you.
But that's a very good question. So
Yeah,
whichever strategy you'll be doing in future, once you start seeing that the market is losing momentum, let's say you are scalping, don't continue buying. You know, sometimes we buy here at the top and then the market turns. I think I'm sure you've been caught up in such situation. You buy at the wrong place. So some of these things will also help you to know when to stop. Let's say you're on a buy. When you start seeing some of these patterns, you stop because the market is about to turn. Go back. Carry on, Jackson.
Yeah, I wanted to say something. Huh? Indeed, this ascending terminology and descending, sometimes it may be confusing. I think let's not look at it in its English definition. We know ascending is actually going up. You know, descending, we know it is going down. But for the purposes of this particular strategy, when we're talking about ascending, yes, we are saying that what should come to your mind is that the market is now slowing down. It is slowing down. It is not now taking off because it is ascending. Slowing down is actually the word that we should be using here. But for the purpose, because this is how it has been designed, the person who actually designed this one, he found it fit that he uses the terminology ascending and descending, just to indicate that at that point in time, if it was an uptrend and it has started ascending, no, just let it click in our mind that the market is slowing down and preparing itself to turn around. Descending, the same. Now it has started, yes, it was in a downtrend, but now descending does not mean it will accelerate downwards further. It means it's now going to slow down so that it can turn around. I think the two terminologies, downtrend and descending, they may, when you look at it in English terminologies, it may mean the same thing. But here we will have to amend them at the back of our mind to exactly understand what they mean.
Yeah, just to also make you understand better, I've drawn something here. So as you can see, sometimes this is how the market moves. So this is an uptrend, and I hope you'll be able to notice. So right down from here, this is one impulse, then this is a second impulse. If you notice here, this impulse is quite strong, right? So this is still an uptrend. The market is going up. But notice what is happening here. The impulses start becoming shorter and shorter. So meaning the market is still going up. So around here, this is what we're calling ascending. So the market was still going up, but instead of, unlike down here where the impulses are very strong, the market goes up, but it pulls back in. Goes up, pulls back in. Goes up, pulls back in. So when you see this, know that the market is about to do this, what I've done here. It's about to turn. Similarly, when you're going down, the impulses will be strong, going down like this. And then when you start seeing this, they're becoming smaller. Now this is what you call descending. And what most likely will happen, the market will just turn like that. So here we are on a downtrend, very strong impulse, strong impulse, strong impulse. Then here we start slowing down. The impulses become strong, meaning we try to go down, but we pull back in. Go down, pull back in. Go down, pull back in. So this here we are descending. The market will turn up. The opposite here we are going up. Strong impulse, then they start becoming, and this is what is shown here. We attempt to go up, like create a new high, but we're coming back. Create a new high, coming back. We're not, the highs are not becoming strong. So here we are ascending. Yeah. It will take you time to think, but just know that it's still the correct English term, like ascending. We are still going up, but the momentum has reduced. Descending, we are still going down, but the momentum has reduced. All right?
Yes, that's clear.
Forgive my
maybe we can
scribbling.
use the word. Yeah. Maybe you can use the word speed. The speed at which it is going up reduces. The speed at which it's going down reduces.
Yeah.
So let's, for now, if it's easier for you to imagine speed instead of momentum, we can say when the market is going up, when you see those big candles, okay, the speed is quite high. But then if you see the speed starting to reduce, okay, so it is likely that actually now it's losing momentum when that speed is reducing. So the candles they look like they're smaller, or the impulses look like they're smaller. Okay? And then that's what we call ascending, if it is continuously coming back, like this pressure from the top. Similarly, if you're going down, the same thing. When the speed at which it was coming down suddenly reduces, so that now it's coming down, but not as fast. It's like this pressure from down pushing it up. Speed.
Don't worry.
Yeah, just a comment.
Okay, carry on.
Comment. Go ahead.
Yeah, sorry, Vincent. Here, can I make a comment?
Yes.
Yeah. I also seem to notice that when I look at the candles, the slope of the up or down trend is steeper than the ascending or descending pattern, as the case may be. So I'm wondering whether it would be some indicator. For example, if you were to do a channel, let's say you're looking at an uptrend and you do a channel on the uptrend, and then when you reach an ascending pattern, if you draw a channel on the ascending patterns, you probably have a channel over a smaller slope, and the width of the channel will be smaller. I wonder if that can be an indicator, because remember, you're watching these things every 1 hour. I wonder if one could use that as an indicator, say, okay, I can see that an ascending pattern is starting there by merely drawing a channel. And then you compare that with the uptrend, which would have been steeper, so to say. I wonder whether that assumption can be correct.
Actually, you're absolutely correct.
The sort of thing that Tim is doing there.
People have done. You are absolutely correct. So sometimes some people do this. They draw a channel like this, and you will notice that this channel, if you were to draw a bigger channel, is different from like now the bigger channel that was down here. You get my point? So it's almost like a channel. You see this one? Hello, Vincent? Hello?
Yeah.
Yeah. So
I can hear you.
This is what you're asking, that whether you can draw a channel like this. You see, this is my blue lines. These ones.
Yeah.
Yeah. So you can do that.
Yeah.
So that it actually works for you. It means that if this was really steep, we're going up, then this becomes like gradual. You understand? It means that it has reduced. So
yeah,
the speed, as coach is putting it, or the momentum is reducing. You get? So you're still going up,
okay,
but now it has reduced considerably. Yeah, so you can do this to help you see it.
Okay.
Okay.
All right. Okay. Thank you.
Yeah. But don't worry. This was a crash course. Take it slow. We play the videos. There's still plenty of time for you to go over it until it really sticks. So, but don't rush it. Don't rush it. Actually, if you feel like you don't understand, just go back.
Ken.
Yes.
Yeah, Ken. I think while on the drawing of this channel, I will want to add to be quick to add that while we are still learning this, don't rush there. You are going to mix yourself up. If you start drawing the channels to confirm for you, actually, there is a descending pattern or an ascending pattern, is likely to mislead you. Remember, what the first candle, remember Ken said clearly that you need to look at two candles to confirm actually there is a two consecutive candles which will pull back into the previous impulse, so that you can be sure that you can conclude that actually you have an ascending or a descending pattern. It is possible that the first candle pulled back, but then the second candle, it is not so big, but it did not pull back. You see, if you draw this channel, it is still fitting very well, but then in reality, there is no descending pattern. So
okay, just hold on, Jackson. We have less than a minute, so I'm wondering whether to start another
right.
session. I feel like we have not really exhausted this. Do we end this
Okay.
and start a
Maybe
new one,
we
or
finish
do
up
we
and
end
then
it
we
here?
check in.
Yeah.
Yeah, we log out and then we log in again.
All right.
Okay. Yeah. It's better to clarify
Okay.
these things.
Mm.
Yeah.
Okay.
Okay.